Hello, traders. Welcome to this technical analysis for the weekly forecast. Today being 13th of April, the year 2025. Um, at the time of this record, it's about 15:29. All right. Yeah, let's get started. Before you do anything, please subscribe to my channel. You can visit our website, www.againstfs.com. We have enough materials there that can, help you to start while you contact us. So for us to train you, in trading or in any field, you need somebody to mentor you. All right. So forget about the cost, the fee. There is no free lunch, all right? So you have to pay to acquire a knowledge. It's like that. And trading is something you do, you know, coupled with maybe you are working, you can still trade, you know, because we have sessions, you know. So if you want to know about sessions, you go to my YouTube channel. I've treated that. We have the London session, we have the Asia session. We have the New York session, then we have the Sydney session as well. So, as we all know, trading is 247, all right? 247, 5 days in a week. All right. Before you start up your analysis, and I want us to stick to three rules. All right. I have a video that I've released concerning this. You can go to my YouTube channel and watch it. It's very important you watch it, listen to it very well, apply those rules, and you will discover that you will just be consistent in your profiting. All right. You'll be making profit consistently. All right. So you must master market structure. Because without market structure is just it's like a foundation. All right. If you are setting up a building, before you even start, you already know if it is going to be two-story building, three-story building, four-story, five-story building, or just a bungalow. Is the foundation that will determine. So you need to know market structure. Now, market structure will show you how whether the trend is going up, or there's an internal structure shift, or there's a retracement. It show you where the support and resistance is, the major support and resistance, and it will tell you the market structure will show you the minor and the major structure in that trend. All right. And once you are able to identify all those things, all you need to do, you mark out all the major support and resistance level. And what you need to do next is just to wait for price action to get to that your level. Then you take action. Then another thing that we are going to be doing here right now is the top-down analysis. Top-down analysis that we always do every week, all right, so as to assist people who don't know how to analyze pairs, all right, is just a simple thing. You go to the higher time frame, you know the direction of the trend. Then you scale from there you start scaling down for you to be able to take a proper decision on where the market is headed and what the price action is likely to do next. That is basically top-down analysis. Then rule-based method of risk management. If you are to place a trade, all right, if you are to place a trade, you have a predefined rule have a predefined rules. Okay, my stop loss should not be more than 10 pips. If there's any trade I want to take that is above 10 pips, as in stop loss, I am not going to take that trade. I will wait until I'm able to filter an opportunity where I can use 10 pips as my stop loss. That is rule-based method of risk management. If yours is 20 pips, if yours is 30 pips, 40 pips, you set it. 20 pips, 40 pips, if it is 20 pips, anytime you want to take a trade, your stop loss must not be more than that 20 pips. That is how to set a predefined rules, for your risk management. All right. And apart from that, your target should be 2 to 1. All right. If your stop loss is 20, then your target, your TP, from the point of entry to your take profit target should be 40. Then from your point of entry to your stop loss should be 20. If you are to use your own rule-based method of risk management is 10 pips stop loss. That means you should be targeting 20 pips. That is where your take profit is. So, what defines your risk is your entry point. That is what you have to get rightly. You have to be right about that at all time. Let's say I am entry from here. Then my stop loss, I will say, okay, my stop loss, I want 20 pips. That is my rule-based strategy. 20 pips. Then my target, where will I be targeting? I will target 20 pips. All right? I will target 20 pips. Just so you understand. You said 20 pips from here where your target will be 20 pips. All right? 20, then 40 pips rather. If your stop loss is 20 pips, that is your rule base, then your target where you take your profit, we should be 20. All right. So that is 2 to 1, 2 to 1, 2 to 1, 2 to 1. So it's very simple. This is how it is 40, this is 20, 2 to 1. All right. 2 to 1. That is a risk management. That is how to apply a rule based method of risk management. So, without wasting time, let's dive into this analysis for the day. We just normal thing that we do is no longer a new thing, but if you are new, all right, please subscribe and drop a comment. And if you have any peers that you want us to help you to analyze, drop it at the comment section. We'll just do the analysis and send it to you. It's a very simple thing. And we hope after watching our videos over and over again, you should be able to even sit down on your own with your system and do your own analysis. So there's no big deal in, analyzing peers. Once you're able to know structure, you know how to do your top-down analysis, then your rule-based method of risk management, you apply all these three concepts, you are okay. Trade management, as maybe once you place your trade and you see that it's going to your favor, once it move from one level and it's going to the other level, you can just carry your stop loss, move it a little, just like that. Or if you see that it's a very strong trend, all right, if it's going higher, all you need to do, you take partial profit. So that one is trade management. But the one that is important is your risk management. Manage your risk well. And once you have already outlined those things, your risk management 20 pips, if it is more than 20 pips, don't enter that trade. Let the trade go, wait for another opportunity. That is how to stay disciplined. So without wasting time, this is monthly time frame. As we can see, we created a high, price pulled down, we got a rejection here, then we are going we started going up again up until price got to this point, 1.3210. Then it started retracing from here. All right. So with this movement, we know that we've been bullish, but there's a problem here. The problem now is that when we scale down now, you will understand from the monthly time frame. We have identified that we are currently going bullish. All right. Now on the weekly time frame, this is where you mark all the support and obvious resistance. Mark all the support and obvious resistance, like here, this point, and this point. All right, one, two, three. These are obvious support, and here, this one, these are obvious resistance. All right, when price is going to the upside, price, this is where I put my cursor here. This is a support level. Price push to the upside, all right, created a high, which is a resistance, a pullback. All right, this point here is another support level. Price broke structure to the upside, all right, came down, there's a pullback, it created this, break structure to the up, it broke structure to the upside, created a high, which is a resistance, came down, and this retracement stopped here and created a support. The next move, it pushed to the upside, breaking structure to the upside, then created a resistance here, then price pull back, all right, pull back to this point, all right, a created a support here, then a push to the upside. This is where we are in the market right now. Then, now that we have identified our support and resistance level and we have marked them very well, the next thing we scale down to daily. So we scale down to daily. Now, this daily structure, this daily time frame now, if you can see, open your eyes so that you can see very well. Let's start from here. This is a push to the upside. It created a resistance, a push, a retracement, all right, created support. It pushed to the upside, created a high, breaking this structure, This is a break of structure to the upside. It created a high, a resistance here. Now, on a normal sequence of trading, price action is not supposed to now retrace and violate this support level. Now you can see that price action came down, violated this support level, it came down and created a low here. And this low, which is a support, all right, now a resistance is now turned to become a support level. Now there is a problem in a sequence. Once support level or a resistance is broken, that means something is about to happen. As a trader, once you see that, then you should be very, very watchful and vigilant. Now that price action has violated this support level and it created a support here, all right, now we now see price rolling up again. There is a bullish run to this point, and when price got to this point, it stops. Before market closed on Friday night, what happened was there was a pullback. There was a pullback, and market now closed at this point. this point where we have 1.30740. This is where market closed. But before then, price action traded up to this 1.31450. But it traded up to that level. This is the high. Then it now came down to this 1.30740. That was this is a level where market closed on Friday. So what should we be expecting now when market open today being Sunday around 11? So what we should be expecting now is that if you look at price moved from here to this place, it created a high, retraced, created a low, push to the upside, breaking structure from here. It broke a structure from here, all right? Break of structure here, all right? What we supposed to expect is price coming down to this level to retest this level, or worst case scenario, price should come here, get to this level, then trigger a buy and break structure to the upside. But what happened? Price action came, violated this support level, then came down and created a low. All right. Now, after it created a low, this is where he found a support, former resistance, now support. Then he now dished this level, now dished out a buy. And this buy got to this point, but it could not take out this high. That means something is about to happen. Watch this place. Something is about to happen. All right? Something is about to happen. So when market opens, we should see a push to the downside. Then if we scale to 4 hours, we discovered that when price created this high, you saw it, this is the high, price created this high. When price got to this point, there was a push to the downside, right? There was a push to the downside. Then this resistance held, this is a 4 hour now. This is how to analyze PS, my guys. This resistance, this resistance, all right, stopped price from going below this level. At the end of the day, we can now see that there are buyers in the market. We can see that there are buyers in the market. So what should we do? All right, when market open, when market opens, we want to wait. All right, we want to wait to see the reaction of price action. We want to see the reaction of price action. All right, now buyers are in the market, there's no doubt. Now, if we look at it, price action should get to this point again, all right? Then dish out a sell, all right? Dish out a sell like this, then start coming down. Or, or price action should be able to come break this level, all right, because once price action get to this point, there will be a reaction. Once the reaction happens, it will now come retest this place as in to create a support before it can break this level. So in all, we'll wait to see what will happen. Is either price breaks to the upside or the trend will continue to, once price pushed up to this level, then it will now start coming bearish. All right, so guys, thank you very much I hope this next week will be better.